Population is a major factor when it comes to home prices. And this was incredibly apparent during the population boom of 2021 to around 2023. But now, Ottawa's latest budget projects zero population growth, basically a first in modern history, signaling the end of the demographic alpha. BC home sales data is out and they dropped in sales volumes 10% from this time last year, but prices are actually up. In fact, nationwide, every province except Ontario is seeing values rise, at least from 1 year ago. Meanwhile, we see condo starts collapsing even further. Consumer insolvencies just hit a new record high, and there is new research that links rising housing costs to falling birth rates. This episode is all about how population growth affects housing. Let's break it all down. First up, we're going to talk about the October numbers for all of British Columbia because they're in. And when it comes to sales volumes, as mentioned, they're down 10% from this time last year. Saw about 6,370 homes sell during the month of October. Prices, however, they are up. Home prices average an increase of about $8,000 from a year ago, reaching $987,600. So that equates to about a 0.8% increase from 1 year ago. Now, this likely sounds almost counterintuitive from all the stats and data we've been sharing from this past year. Though remember, we largely focus on GVRD, not the province as a whole. And that area, our area, is unquestionably down price-wise, about 3.4% from a year ago. So this provincial uptick in prices demonstrates that many areas outside of the Lower Mainland are clearly experiencing upward trending prices, at least for the last year. When we look to Canada as a whole, the most recent data shows that every province other than Ontario is seeing higher prices than 1 year ago. Have a look at the national map that we're sharing right now. This is from September, so next month's numbers will be slightly different, but this map shows BC up 0.4%, but we know the most recent data shows us up 0.8% from last October. Ontario is down 2.9% from a year ago. And even though, we know Ontario is kind of the epicenter of the housing downturn, and some areas are off, 28, 30% in some pockets. So it really shows how hyper local markets really do affect and how singular they can be. Two provinces are up over 10% from a year ago, being Newfoundland and the Northwest Territories. So there you have it. As a whole, the country has rising prices, but again, it's the hyper-local markets that are clearly the most interesting and telling.
Very telling indeed. All right, so let's move into population here, because a major economic factor that will obviously have a direct correlation with home prices is population. For decades, there has been one constant in every bullish argument for Canadian real estate, and that is that our population always seems to grow. It's always going up. But that steady influx of people was the wind at the sellers' backs, fueling rent growth, driving pre-construction profits, and inflating asset values year after year after year. But that tailwind is currently disappearing. Ottawa's 2025 federal budget projects a near zero population growth for the first time in Canada's modern history. That is a seismic shift, because if people stop coming in, what happens to the entire investment thesis that is built on perpetual scarcity? Between 2020 and 2024, population growth was the single strongest driver of housing returns. It filled rentals, boosted prices, created the illusion of unstoppable demand. But the federal government's new limits on both permanent and temporary residents now removes that advantage. When growth slows from 3% to near zero, the math behind the property valuations will completely change. We're already seeing rentals drop as supply finally begins to catch up. Developers who built portfolios around continuous immigration will now face longer lease-up periods, leaner absorption, and slower appreciation. The easy demographic premium that built in a population boost is gone. There's also a bigger economic layer to this. Between 2021 and 2024, almost all of Canada's GDP growth, came from population expansion. GDP per capita, this is what we actually earn and produce on a per person basis. It barely moved. As immigration slows, we'll now have to face a productivity problem head on. The the Bank of Canada is already flagging slower labor force growth and higher unemployment among youth and newcomers, both of which trickle directly into that rental demand. RBC stated this week that we continue to expect Canada's population growth to slow to roughly zero in 2026 and in 2027. At the end of the day, Ottawa's immigration framework is now acting as a policy lever for housing, much like you would fiscal and monetary policies. Reducing intake is, in effect, a demographic version of a rate hike, cooling demand, but without having to touch those interest rates. For investors and developers, the era of the demographic alpha, as Dan mentioned earlier, where population growth guaranteed returns, is all but over, at least for now. Population growth built the story of endless scarcity, but policy is now rewriting the story. And those who adapt to this new chapter will be able to stay ahead.
So we've been talking about the new condo construction industry for some times and how condo sales affect future supply. So check out this chart. It's from Ben Rabideau, and it demonstrates this so incredibly clearly. New condo sales affect new homes being built because condo starts lag sales by around 18 months. And you can see the correlation between these two is incredibly close. You can very plainly see the continued drop in new condo sales, and right behind that, new condo starts. Just look how much further or slower condo starts are headed. Already at a 15-year low, they're only going to continue to drop as time goes forward. The impacts on the construction industry are already being felt. StatsCan's data highlighted that with the unemployment numbers just last week. And those in the industry will likely see fewer and fewer jobs as this trend continues.
And let's now look at fertility rates. This is a fascinating story, and I hope it hits home. Here's something that you just don't hear very often. Our housing crisis isn't just making home ownership harder, it's actually changing how many children Canadians are having. A new study from Benjamin Couillard, a PhD candidate out of the University of Toronto, looks directly at the links between rising housing costs and fertility rates. Using U.S. Census Bureau data, he found that increasing housing costs since 1990 are responsible for 11% fewer children and 7% fewer younger families. Over half of the total fertility rate decline between the 2000s and the 2010s. Even more interestingly, his research shows that building larger family-sized homes has a much greater impact on boosting birth rates. Specifically, a supply shift towards larger units leads to 2.3 times more births than an equal cost increase in smaller units. Now, think about it for a moment. When housing becomes so expensive that young couples can't imagine affording a second bedroom or the yard that could come with it, they start making different long-term family decisions. It's not just about whether they can buy a home, it's whether they can grow into one. And this is where the conversation gets a bit bigger than real estate itself. Canada has already slipped into what demographers call an ultra-low fertility category. Meaning our population isn't growing fast enough to replace the aging one. That puts more pressure on immigration to sustain the economy and to sustain the labor force. In other words, housing policy isn't just shaping affordability, it's shaping the country's entire demographic future. And here's a bit of irony for you. While we constantly debate, the supposed downside of building new housing, shadow impacts, height limits, development fees, taxes, we rarely talk about what happens when we don't build enough home. And this study makes that consequence crystal clear. Not building enough family-sized housing doesn't just hurt affordability, it literally lowers our birth rate. So maybe it's time to look or flip the script, look at this differently. Instead of taxing and over-regulating new 3-bedrooms or larger homes, we need to incentivize them, not just for the sake of our real estate, but for the sake of our country. Imagine eliminating or drastically reducing development charges, building permit fees, and parkland fees for true family housing. The economic and demographic payoff would likely be far greater than the short-term revenues that the government would likely squander. Because if Couillard's work tells us anything, it's this: when housing policy supports family-oriented homes, more families actually happen. And that is definitely something we should be building towards.
Wow, this is such a case for the missing middle initiative that's currently unfolding across our province with the Bill 44 legislation that came into effect a couple of years ago now almost. It's clearly important. I mean, can you believe that people are literally having less children because they don't have room for them or they don't feel comfortable raising them in a home that doesn't suit the type of lifestyle that they want? Ideally, things like missing middle, small multi-unit homes that are coming to market will start to increase at scale, and we can build the homes that families truly want to grow into. Okay, lastly today, we're touching on consumer insolvencies. We all feel how expensive it is to live in Vancouver, to live in Toronto, to live in BC as a whole. And consumer insolvencies, well, the data reflects that, because in BC, the insolvency rate just hit a record high in September. And that surpasses the previous peak, which was recorded back in 2009, basically during the global financial crisis. Now, sure, this is not adjusted for population, but it's still absolutely a notable record. Most of the rest of the country, they're still actually well below the '09 highs. So it really demonstrates that BC is becoming so incredibly unaffordable. The chart shows an almost straight line up since 2021. And as more and more mortgages are renewing at higher payments, you can be all but certain that this insolvency rate will continue to increase, because Canadians, they pay their mortgages, right? That's very obvious when we look at the current arrears rate. But where they choose to pull back or have to pull back are areas like their credit cards, their car loans, their lines of credit, and things to that nature. So it's a tough province, and there's a reason why people aren't buying those new condos, and it's because the cost of living is so incredibly high. Ryan, you got some comments to wrap this one up?
Well, I mean, when you tie affordability into not building the right kind of product to promote families, to promote sort of the next generation of people at least equal to that which is required to replace the current population, this is a big problem. Although, I think this is a relatively big problem, not just in Canada, but around the world. And I think we're finding, that there's just a lot of promises that are needing to be fulfilled. And, at what point do we start looking and saying, no, we can't keep building stuff that's very good for investors. And we need to look at product that is going to sustain people here in the country so that we can prosper long term. That's part of the investment that's required here, I think.
Well said. And thanks as always for tuning in and watching. We will see you here again next week. Take care.